Hello, to all traders, and welcome back to another market review brought to you by Orbex. So we're looking at the key economic data that's been released this week after the US government shutdown. Finally, we got some NFP job numbers, two lots in a row actually. October saw 105,000 jobs being shedded, while November's one had 64,000 jobs being added, but this didn't stop a little bit of a pullback on the big indices, the Dow, the S&P, and the Nasdaq, all moving a bit lower. As sentiment just focuses more on the Fed now rather than the AI and tech sector topics that's been really dominating price action for the last year or so. If we look on the daily chart on the Dow, for example, if we're going back all the way to the middle of the year in June, look at this bullish rhetoric here. I mean, wave after wave of upside potential. We had that brief sell-off on in AI when a lot of traders and economists thought the bubble was finally going to be about to burst. But since then, as you can see here, we have pretty much eclipsed that particular sell-off pattern. And now we're just going into a little bit of a consolidation, having a bit of a step back, which was probably usual after topping another record high for the Dow. If we look on the intraday chart as well, we're just seeing now that prices are just more shedding towards the downside now, having a bit of a brief pullback, but nothing out of the ordinary after this momentous rally that we've seen on the Dow. The RSI is also falling into the neutral area as well. So with that being said, we're just basically looking at the last couple of weeks of the trading year to see if there's going to be any big surprises. Obviously, the Santa rally could happen again, where stocks seem to start surging at the end of the year into the new year. And that could obviously happen because we've still got a little bit more time for that. But at the moment, sentiment does remain still bullish. We're just having a little bit of a brief downturn at the moment to see if prices are going to start crawling back and getting to where we were not so long ago. So, as I said, from a stock point of view, AI and tech have really been the big drivers over the last year. But in the near term, we're looking at the Fed to see what their next move is going to be. Are they going to have this economic data this week with their non-farm payrolls and inflation that's coming up later in the week to see if they're going to have any big surprises in their monetary easing, or they're going to stay hawkish or dovish? We'll have to wait and see. As always, we'll bring you all the latest in that. But let's just take a quick look on the S&P as well, because that's taken a little bit of a dive as well on the intraday chart. Just quickly go on the daily chart. As you can see here, it's been a bit more of a sell-off because we're seeing really two bearish candles in the last couple of trading days, and even today is a little bit indecisive as well. If we go on to the intraday, as you can see here, this V-shaped recovery that was taking place has come to an abrupt halt around the 6,900 area to shed a few hundred points, and now we are a little bit more subdued and bearish than the Dow. The only saving grace, probably the stochastics and the RSI into a more of a oversold basis, so we could expect a brief jump if we do find a bit of support from yesterday and today's trading. But at the moment, we could have another little bit of a sell-off when markets do open later on. So let me know what you think. Are we going to have more of a bullish or bearish rhetoric as we close out the rest of the year? And where do you think the Fed is going for next year? Are we going to have more of an upside momentous shift? Or is the Fed going to start pulling back and thinking, wait a minute, the jobs numbers are not good. Inflation is creeping away from 3% now, not even 2%. And where do we go next from here with stocks and AI? We'll have to wait and see. But like I said before, we'll bring you all the latest in fundamentals and technicals as they come. So stick with us, stay ahead, trade responsibly, and we'll speak again next time. Bye for now.